Jim Leventhal, Joe Terranova, Bryn Talkington, and Jason Snipe. Let's show you what the markets are doing. We're down more than 700 on the Dow, at least 1% declines across the board. We know the two most important stories of the week, the continued fallout from the SCOTUS ruling on the tariffs, the NVIDIA earnings on Wednesday. The president continues to attack the ruling. He continues to attack the court itself. He continues to threaten even higher tariffs. And there still remains a lot of uncertainty over that. However, if you look at financials, if you look at some of the private equity names, if you look at discretionary, which is down a bunch today, anything that saw any level of relief last week is back down today, Jimmy.
Yeah, and you started with the tariffs, Scott, and as we talked about on Friday, this is going to increase uncertainty in the short run, but in the long run, it should actually reduce uncertainty. There does appear to be a cap with these new tariffs of 15%, above which the president can't go. So, yeah, there's a lot of questions over the weekend. Are various countries going to adhere to their deals? That uncertainty will linger, but I think what we're seeing today, Scott, is some of the other issues that were pretty big last week. Continuing concerns about private credit. I think that's what's hanging on to the financials in particular. Let's not forget the State of the Union address tomorrow, and there's a lot that's going to come up in that, not just lambasting the Supreme Court, but the president's going to lay out what his plan is, should lay out what his plan is with Iran, and I think that's hovering over the market as well. So, you know, just those two things alone, concerns about private credit and potentially attacking Iran, those would take top billing if it weren't for the uncertainty increase in the tariffs. Put it all together, there's a lot of uncertainty, Scott.
Yeah, we'll get to some private credit-related things as the show develops today, but all those names are down, and down a lot.
Yeah.
The private equity related names, we're talking 7-8% declines. The major banks like Citi's down 5%, Goldman, JPM are down. Bryn, so it leads me to you on this notion that things that got relief on Friday, and I use it in quotes because it was obviously short-lived for many of these stocks, didn't react the way that you thought they might on this tariff ruling. I think of Nike and I think of On Holding, which you sold both. You sold them, which is interesting to me in that you bought them because you assumed that SCOTUS would rule the way it did, but the stocks didn't react the way you anticipated they might. So now you're out. Tell me more.
Welcome to investing, right? And so, I mean, both great companies, right?
For the Nasdaq, but nonetheless a pretty good-looking day. Joe, we've had some really wild moves in this market lately based on the anxiety that we're talking about. I mean, IBM has its worst day in 25 years. Yesterday, you have like a different catalyst every day. Now you have this Citrini paper, right, which causes all sorts of anxiety. This hypothetical look at how the disruption caused by AI could play out in the years ahead. The FT today says of that, quote, the Citrini fuss is further evidence that we are in an expensive market that is looking for an excuse to fall for reasons that are probably wider than just AI. How about that notion?
I mean, that's an interesting interpretation of what's gone on so far year to date. But I think the main motivation has been this AI disruption that we're talking about
Perceived.
now. Well,
right?
Perceived. And by the way, we'll
projected, speculated upon. I think that's the whole point of this commentary.
And it's interesting because we're higher today, and I thought the Anthropic live stream this morning attempted to give a little comfort to the marketplace that there's not going to be complete disruption. But look, coming into the year, you had all the reasons to say to yourself, we're going to recalibrate positioning away from the areas of the market where you've seen that strong outperformance, and it's the asset-light businesses. So the move on a valuation perspective into areas of the market like energy, like materials, like industrials, that was warranted. But I just think collectively overall this year, the market's spinning all over the place. And Scott, when the market looks really good, you want to fade it. And when the market looks like it's breaking down and it looks awful, you want to buy it.
Man,
I think that's the approach.
Look at that year to date out of the S&P. In part that shows a resilient market, but it also shows, Jimmy, these continued V-shaped bounces, right? I mean, that's right in front of your face.
Right in front of your face.
Every bit of anxiety that has happened within this market has been bought. The question is, are we at the precipice of something different? Do we, in fact, as the FTC?
Positive this afternoon, up 1.5%. Jeffrey's saying this reversal is certainly making people wonder if it's a sign the lows for software are in. No firms downgraded the stock today, just some cutting their price targets. And again, Workday is still on track for a 5-week losing streak and a record-setting 5th straight month of losses, down 45%. Coming into this. Still a reversal to keep an eye on. Elsewhere, here's a name being helped by AI. It's Axon Enterprise, the maker of tasers, body cameras, and drones, soaring almost 18% today after better than expected earnings and guidance. They say AI is accelerating demand for products like license plate recognition and voice-activated companions built into body cameras. The CFO expects Axon's software business will even soon outpace hardware growth due to these AI tailwinds. That's a story we haven't heard much about. The shares are having their best day since 2024 and are still down about 40% from their all-time highs. Speaking of businesses embracing AI, remember, NVIDIA's own CEO, Jensen Huang, his message to employees is to embed AI into everything you do. And a similar message is cropping up now amongst this year's CNBC changemakers. Today, our new list is out, and joining us with the details is our very own Julia Borston. Julia?
That's right, Kelly. AI is a rising trend among this year's CNBC changemakers, innovating across industries, using AI in industries ranging from real estate to healthcare, with 16 tech executives on the list, including...
Margins this year is a combination of two things. One is procurement. So they were out in front of this like much before anybody else. I mean, he was in Korea, eating chicken and drinking beer with, the chairman of Hynix, like not that long ago. There was a reason for that. So they've secured, memory earlier before others. So I'm not really worried about them getting that supply. That's good. But on the pricing front, you're absolutely right. They need to take prices up because their costs are going up. So it's imperative on them to make sure that they're improving performance much more than they're taking up price. That's actually their ceiling in my mind. It's not anything else, competition or anything. It's the amount that they can improve performance. He already gave some data points on Rubin at CES, and it was something like I don't know, 10x or whatever it is. And I mean, as long as they can keep performance improving on that kind of a trajectory, I'm not really worried about their ability to price to it, because it's still a very NPV positive thing for their customers. Pricing is doubling and performance is going up 10x. Most customers will take that all day long.
I mean, it's interesting, Malcolm. Yes, the stock has started to run again into the number, which does something to expectations, I would suppose. But according to Vanda Research today, retail conviction is soft into this number tonight. We know that shares have seen somewhat of a muted reaction on the backside of most recent earnings reports, the last three. The stock's gained or fallen less than 3.5%. What moves the needle for you?
Yeah, I think that Stacey's point about productivity getting stronger could create sort of a good news is bad news kind of scenario where maybe the market sees that as an opportunity. I personally trimmed last week, might trim again depending on how shares go after the close, because my concern now is the market might start reading this as if we can get more productivity out of our chips, if Rubin does actually increase output by a factor of 10 or something.
Russell's down sharply. Dow's down more than 1%. PPI was hotter than expected. Tech's unsettled. Financials are down. The VIX is up again. Robbie, this is a tough market all the way around. You're looking at the worst month for the S&P since April. Nasdaq on pace for its worst month in nearly a year. Tech's on track for its 4th straight down month. That's the longest streak since 2018. You get the first chance to weigh in on these markets.
Well, there's no question it's jittery. You can have good reports from companies like NVIDIA. Really doesn't matter. It's been driven by sentiment and market headlines almost entirely. And I think what we've been trying to do through this is prioritize diversification and an emphasis on more durable cash flows and reasonably valued companies. We all have to know that volatility is a part of a bull market as it ages. Does not mean it's over. It just means that it's aging. And sentiment's going to drive in the near term, and fundamentals are going to drive long term. What we've seen is a re-rating of fundamentals. And so now you have some of the best growth companies in the world trading at more attractive levels. That it was almost a necessary and healthy reset. And underneath the surface, you've seen a lot of change. The market has broadened out. The indices are not down that much for the year. Obviously, the headlines are. We all kept asking each other on this show all the time, Scott, can the market do okay without these big names? Guess what? I would argue it's done okay. Nearly all active managers, or many active managers, are beating the indices.
Well, it feels worse than it is. To your point,
yes,
all 3 of the 4 majors are green year to date. Russell's up almost 6. The Dow's up 1 3/4. It's just been really choppy. Jimmy, it's been really volatile.
Yeah.
The Nasdaq's down 2 1/3% to start the year. It just